Good morning, traders. It is Thursday, January the 16th. Taking a look at the charts. Looking at the SP 500, you can see we continue to march our way higher. Let's just zoom in here. We are up again another third of a percent. NASDAQ up about the same, and small caps are up 0.6%. Let's take a look at the small cap, the RTY, which is the Russell 2000 futures. You can see this as the IWM as well, which is the ETF. But more or less, you can see this week it's had a very strong move. 1, 2, 3, 4 up days back to back. We're pushing to some multi-month highs here. And it is more or less in the power zone, is leading the way, which is really interesting because there's money moving into all the asset classes, whether it's risk on or risk off. We're seeing money really flow into equities. We're seeing money this week start to flow into precious metals. Bonds have been moving higher. So it's really strange that the large caps, the small cap stocks are moving higher along with bonds and metals. And it goes to show there's a big mixed party out there of people buying, groups buying each half, and that's usually a sign that some type of big shakeup is about to happen, whether it's a big rally and extension in equities or if it's a sharp correction. I feel as though the market is on the verge of correcting and pulling back, the stock market that is, and for metals and bonds to start to lead the way. That's where things tend to be, are looking to be headed. But overall, let's take a look over at, let's go to bonds here real quick. Here is the bond chart. Now in the morning update, I posted our trend analysis chart showing a falling trend line and how we're starting to break above this. And we still have this previous pivot high to break here that it tested yesterday for it to kind of really be making higher highs. But overall, the trend has shifted to the upside. The momentum is to the upside, and usually bonds rotate and start to rally before the stock market starts to roll over and sell off. So this is a potential very early warning sign that the market is starting to, the stock market's starting to roll over. Now, if we take a look over at, let's take a look over at gold. Gold had a big rally. It's still in consolidation mode. It's had a nice recovery, pretty much gold, silver, and miners this week. This could continue to channel down for a while. This pop that we've seen the last 2 days could just be an oversold pop, which is it falls in line with what we saw. We saw panic selling on Monday. That's usually a sign of it being short-term oversold. We got a pop. We've had about a 4.5% pop in the last 2 sessions for gold miners. Let's just pull up gold miners. You can see we've had a huge reversal back to the upside, but again, this went from overbought to oversold, and now we're having a reaction high. And the question is this going to go down for a more complex, like an ABC correction, to come down deeper into this 39 area, or is it going to start to firm up and continue to rally and go higher? That we just got to let the markets work themselves out. But overall, the trend is still that we've got higher lows, we've got higher highs. It's correcting, perfectly normal price action. Of course, we hit resistance up here, which is one of the reasons why it pulled back. So we just got to let it do its thing. Now, if we take a look at the, let's pull up the 10-minute chart of the GDXJ. There's a lot of lines on here. It's a little messy, and you can ignore all these numbers that just come naturally on the lines that I drew. But I just want to show you kind of from a technical standpoint as price starts to unfold. More or less, we had a really strong rally. The market came back, formed this pennant formation, and if you were to take the low, use a Fibonacci extension, you take more or less this rally point where it started and to the high, to this pullback low, it gives you an upside target of where that price should rally. And we always look at the 618 extension and the 100%. So if we look at the price, here's the 618. This is the target we're looking for, more or less for the first level of the market to hit resistance and pull back. And you can see it pretty much hit there. And by doing so, it has made more or less a broadening formation on average. And this is why we tend to take profits at the 618, partial profits, and move our stop up, because that's the first level that when the market hits that, either it's going to pull back a little bit and take off to go for the 100% measured move, or it's going to be the first level where it's everyone throws in the towel and the market dumps out. And that's why we always pull some money off there and move our stop up to our entry point. Now we didn't play this run. We are long in the miners, looking for the 100% measured move going forward on a longer term scale. And you can see here the height from the low here to the maximum rally. If you just box that in and then just copy that box, this is the exact same box. I just highlighted it and copied it and pasted it to the low. This is usually the breakdown type of move, and you can see gold miners sold all the way off. These little dots here are pre-market and post-market hour trading. More or less came all the way down to this energy, this move here, move to the downside. We had panic selling in the market, and now it's recoiled and it's come right back up to this really critical, right through the middle of this pennant formation. It's also the breakdown zone from this low and where the market collapsed and had a nice ABC correction on the shorter term chart, along with the 100% measured move. And now we're in rally mode where it's rallied, bull flag, rallied. It's in another bull flag. And we really need to start to see it break above this blue line here to get back into a full-fledged uptrend. Right now it has had a knee-jerk reaction. This is the area where it's going to find resistance. It already has. It's already pulling back a bit. Question is, are we going to see legs behind it to push up and get through here and see maybe something more significant? But again, we're looking for much higher prices, but this could still be a much larger correction. Again, this is a 10-minute chart showing regular hours and pre and post market. And a lot of people don't look at the chart this way, but this gives us, let's just go to the full upside potential. So we are looking for, just based on this rally back here and this pullback and this first move up, once you get to the 618, we've got potential now for it to, actually it's kind of reset. We'll be looking at a much more complex move here. Let's just go to a Fibonacci extension. We're looking from this low, grab this from here to this high and over to this low, carry it forward. This is where the new potential move should be. So we've got this rally, we've got this pullback, and now we're looking for, this is the 618. This is the level right where the market, if it pulls back and holds its ground, we should see that 100% measured move to the upside get hit. And notice the 618 here, this level right here, is right through the heart of this consolidation. Just like this breakdown was right through the heart of this consolidation, it's the way the markets move. They're fractal on all time frames, and a lot of the levels will coincide with levels where the average price, the high volume, has traded. That's going to be where the average person is going to want to, who got long, suffered here for big drawdowns. They get back to break even on average and they say, just get me out. That was a scary ride. And they get out and then new money piles in and we see the trend take off without them. It's just the way sentiment works. It's the way the markets have worked for as long as I've been trading them. So that's what we're looking for. We're looking for some upside extension, potentially a pause or pullback, and then hopefully we'll see a bigger move up to this 44.57. And then from there we recalibrate the new moves and figure out where the next upside targets are, as long as it does continue to move higher. Hopefully that made some sense. A lot of info kind of packed in there. Let's go to natural gas. Natural gas, this is a 10-minute chart. I'm going to go back to the daily. Here is the daily chart. We are still dragging out. We are looking for a low back over here. Never happened. It's still trading lower. It's formed another little bit of a bear flag with a hook and a shakeout, starting to head lower again. This could very easily come back down, and we're looking for a potential test of this low over here. This is going to be a really significant level. It's more or less the $2 mark. It is going to be, the way this is dragging out in this pattern here, it's a previous pivot low. I think we could see a really strong pop. If we get down to here, I'd like to put stick a toe into the water with a small position. I think it could have a lot of potential for a much bigger move going to the upside going forward. Looking over at crude, it is flat on the session. It is obviously strong momentum to the downside, and it's oversold, and it's just kind of doing that never-ending grind lower. And it's tough to get short when something has dropped that much, and it's kind of not really consolidating so much. It's just kind of having a one-day pause and grinds a little lower. At any point, it could have a very sharp knee-jerk reaction move to the upside, and that's the problem with trading these. It's going to have a very sharp move, whether it's the bottom's going to drop out and it goes into full capitulation sell-off down to this 55 area, or we're going to see a knee-jerk reaction back up to the 60, potentially even like 60, 50 area. So to me, it's got a lot of potential for it to move the wrong way too far, and I don't want to get in something that's going to be very aggressive and then more of a feels like a random move at this point. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.